Welcome to the CEO Tech Talks podcast, where vision meets impact. I am your host, Ambreen Ahmed. Each episode, I sit down with exceptional leaders who are shaping the future of business, technology, and transformation. This show is about more than just success. It's about clarity, purpose, and those bold decisions that light the way forward. Join me as we uncover the insights, challenges, and breakthroughs from today's most inspiring voices. Leaders who are redefining what it means to lead in a rapidly changing world. This is CEO Tech Talks. Let's dive in. Today, we will explore the intersection of data, insurance, and cybersecurity with Max Henderson, Chief Data Officer at DataStream Cyber Insurance. Max is redefining how data, AI, and insurance intersect, turning cyber risk into measurable, actionable intelligence. Welcome, Max. Thanks for joining.
It is a pleasure to be here. Always fun chatting about cyber insurance.
Great. Well, let's get into it. Tell us about your role at DataStream Cyber Insurance.
Yeah, happy to. I am a co-founder of DataStream Insurance. We have been around now for 5 years. We are the subsidiary of one of the most prominent cyber reinsurance companies out there named Envelop Risk. They're based out of the UK. And we are set up as a cyber insurance brokerage, which means we've built a digital platform that tries to make it extremely easy and well-guided information for customers, which for us, that's small to medium businesses in the US and Canada, trying to get the cyber insurance policy that is the best price, that also has the best coverage, meeting individual companies' needs, which can vary depending on the type of industry, size, things like that. So yeah, we're here to use technology to make the entire process more accurate, have less friction, and also help people really understand their cyber risk from a more quantitative perspective.
Okay. So, what gap did you and the team see in the traditional insurance model?
It's a great question. So I'll also just briefly say, for anybody not super familiar with cyber insurance as product, it's just like any other insurance product, whether you're getting a car insurance, life insurance, it's made to make you whole again if you suffer a loss that's claimed and falls under the types of peril, which in this case would be someone putting ransomware in your network, or you have business interruption that causes you to lose revenue, or someone extorts money from you, et cetera, et cetera. These are all various types of losses you could have from a cyber attack. And these products are, typically $1 million or higher coverage and limits. And it's only really been around since the late 90s. That's the very first cyber insurance products that got on the market. So it's still a very relatively new product in the insurance space. Insurance is a very old industry, obviously. That means that I think technologically there's been many, many gaps because, first of all, insurance is a little bit slow to adopt new technology as is. And this is also a brand new kind of product within the space, relatively speaking. So some of the biggest gaps were that, first, the process itself can still be pretty difficult. It's a highly technical application. You need to know your security pretty well and your products that you have in place. And the questionnaires can be quite long as well. It can feel like a homework assignment for SMBs trying to complete this thing, and they feel like they're giving a test in a class they didn't really take any lessons on. So it can be a little bit tricky and daunting jumping into the insurance application process. And up until recently, these were still big paper PDFs that they'd be filling out. So they'd have to fill out one for one carrier, one for another. We're now at the point where in our platform, we are integrating with a bunch of different products via API. So now we have a single application that you can fill out in a nice digital savable application. You can add multiple people to it. You can add your MSP, which is a managed service provider, if you're using someone to set up your IT and security external from your company. And they can help fill out portions of the application as well. And then once you submit it, it goes out to 40 plus carriers. So instead of having to go one by one to each of these, which you might have to do with a local broker, this is a single one-stop digital application. You save it along the way. You can share it with anybody at your company or external to it to help you complete it. And then it goes out to dozens of carriers at once instead of, one at a time. So that's still one of the biggest gaps is, I think, the friction in the process. And we're trying to use technology to meet the gaps there.
Hmm.
Another big one is trying to automate some of the insights that you would want from a seasoned cyber insurance broker. Because if you're a typical SMB, like, I'm based out of Philadelphia. If I had Max's cheesesteak shop, I might not know what kind of limit I need for my business. I might, again, not know what kinds of coverages are particularly important to me. And this can really dictate which kinds of policies make the most sense for you. And we try to add some of those learnings automatically into the platform and experience. So those are two areas that we try to differentiate ourselves, is really using technology to bring the friction down and also having good insights with that technology immediately available to the customers they're going through.
Okay. What's been the most surprising lesson learned about measuring cyber risk?
Yeah, it's a great question. I think probably one of the most surprising things about cyber risk, at least to a lot of customers too, is that they have to reckon with the fact that good security does not automatically mean like super low prices, because cyber risk is really based on the type of company you are. This is how I would define it.
Hmm.
How good are you at reducing and mitigating your potential risk from cyber, given the type of company you are? Because right now, the things that are the biggest impacts on your price is still more based on things you actually can't change very easily as a company. If you are in a high risk industry and you are larger in general, that's like your initial t-shirt size risk. And if you want a higher limit policy, those three things are going to influence your price more than initially your security, because the bigger you are, it tends to be the case that you're going to attract a larger attack surface. So more people will be going after you. You also have more assets because you're bigger. And so that influences things a lot right off the rip. Same thing for the type of industry you're in. And you expose yourself more for the bigger the policy you want. So, like, those three things are sort of not even getting to the security part yet, but do have like a massive influence on the pricing you're
Hmm.
getting. But what we have seen that I think is maybe surprising is that I think the cyber insurance space has been very good at reacting to a changing and evolving threat landscape. So over time, we have seen the market harden and soften, as again, we think that the market has figured out better security questions to ask and realized also when it didn't. And so added additional data points. Like, during the beginning of COVID, we saw a massive move into a lot of ransomware type attacks that caused a lot of losses. The response of the insurance industry was to quickly move, adjust prices, which a lot of people weren't super happy about. But then they also realized that they had to essentially elevate what they had as typical security. So now, pre COVID, let's say, you could get a good insurance policy, maybe not filling out many questions and maybe not having MFA at all, for instance, and that just dissipates then after that fact, because the market's reactive. They see that there's some like table stakes security that will help mitigate a lot of these common losses. That
Hmm.
becomes the new default standard. And this is sort of happening all the time. So I think some of the most interesting part about measuring the cyber risk is about cyber risk in general in the insurance space is that you definitely control a lot by having better security, and you can get totally denied quotes from some of the best carriers if you have bad security. But a lot of your cost is still going to be dictated by the type of company you are and the size of the product you want. But the other surprising thing I think is just that the market is pretty responsive. They're always looking for better data. They're always looking for what's happening in global and regional trends, and they're making adjustments to then the type of information they want to collect on top of it.
That's a lot to think about. It doesn't matter what size your company is, what industry you're in, how big or small you are. Wow, that's a lot. So, what does a typical day look like for you with all of this going on?
Yeah, so yeah, right now, as the essentially the chief data officer and also more or less the chief technology officer, what I do is, on the one hand, I'm managing some of our partnerships with key vendors, because that's one of the areas we see a really good opportunity for cyber insurance to continue to make the process better for customers. Is why don't we create more integrations directly into security platforms so that customers can take data right from their network and map it onto our questions. So now you don't even need a human in the loop necessarily looking up every single security control. Some of this could be automatically brought over from
Mhm.
hard data. And this is definitely the direction we want to go. So some of my days spent trying to create and manage and implement those relationships. We've got 4 live integrations with a 5th coming on board very soon. So that's a key part of my role. And on the other side, I actively am still doing data work and some software development on our team. We're trying to improve our platform and make it even more automated using machine learning on the back end to try to take a minimal amount of data about a customer and impute, essentially like smart imputation, fill out as much of an application as we can with suggested answers. So
Hmm.
instead of, again, the customer having to look up everything and type everything, they're more attesting to hopefully mostly correct answers. Like in our preliminary data, we with a few data points, we can fill out almost an entire application and it'll be like 85-90% correct. So
Hmm.
they'll still need to make corrections, but it does, again, reduce the friction hopefully further. And as we get more data, we will be even better at filling out these applications with, again, minimal data from the customer, especially if they're maybe sending some data over via one of these integrations, because then we're starting out with much better ground source of truth. Um, so yeah, it's a mix of, on the one hand, business, thinking about the company, trying to establish partnerships that move the needle on our business, and on the other side, it's the highly technical data science, machine learning for cyber risk, implementing things within the platform, figuring out on the product management side what are our partners and our customers saying we need to implement, and trying to be proactive about that.
Okay. So based on what you're saying, is it pretty standardized across most companies, like what security controls and what their environment looks like?
Yeah, it's a great question. So I think what we would say is to flip that around a little bit. I would say that what we would call like like good security, that has I think we believe that that is becoming a bit more standardized, where with, let's say, like a list of 8 or 9 controls, we might have a really good idea about whether this company is secure or not, because security has it doesn't live in a vacuum. If I know that you're doing maybe 8 things really well, it probably tells me a lot about the other things that I haven't even gotten your answer on yet. So, yeah, there's some typical table stake stuff, like we already mentioned MFA, using encryption, well-tested backups, the ability to come back online within 10 days or less. Like, these are some of those questions that, essentially, regardless of who you are, this will drive up price if you answer kind of in the security negative. But in
Mm.
terms of what we see posture wise, it's still quite diverse. There's some companies that work with like managed security service providers or have their really strong internal teams, and they might be bleeding edge and use all the MDR, EDR, XDR kind of technologies and have really good backups and all that stuff. And there still are other SMBs that are living a bit, that again, they're trying to make things work off of a system they set up in the 90s, and it's not exactly what we would call secure, and it is what it is. But so, you know, the whole space of small to medium business companies out there, we sort of either talk to their partners or talk to them directly, and there's a really diversity of security there.
Okay. Thank you for answering my question. I was curious about that. So what major shifts are you seeing right now in the cyber insurance industry?
Yeah, the industry, I think, has been having, relatively speaking, a good year. I think there's been a little bit of softening with the market in general. This is also the weird thing to think about as well. When we think about cyber insurance, again, it's tempting to think about like me as a company. Like if I was going for a life insurance policy, I would assume that the amount I would have to pay, or like the products I could get, would depend on like me. Hey, I started going Orange Theory every day. This should like help my price out this year for my life insurance. But really, in the cyber world, it all depends on like what is happening big picture globally. So if globally we're seeing that there aren't massive systemic cyber losses, if generally there's not big loss ratios across the carriers, they can get more comfortable either assuming what they have security wise is at the right level and maybe be able to reduce prices a bit because they're still profitable. But then you do have those years where all of a sudden, like again at the beginning of COVID, loss ratios are really high. This was making security companies or insurance companies raise their premiums quite a bit to make sure they were trying to like mitigate potential losses from those years, then future ones. And then they were adding a lot more security scrutiny and blacklisting a lot of risks they would have written before because they were being more conservative, basically. So right now, we're in a less conservative market, I would say. There isn't the same kind of like, you know, 70 plus average or whatever loss ratios we saw at certain parts of like 21 or 22, I think. So yeah, like right now, it's a great time if you haven't looked into this product before. This is like a great time to look into it. The market in general is good. I think that still like ransomware and extortion and if anything, the business email compromises and social engineering attacks, those are still like the most common losses. So there's additional scrutiny and hopefully some improvements on just preventing people from doing wire transfers that they shouldn't be doing. So I think that's probably where we'll see continued focus to try to reduce some of those. You might see what we call sub limits on some of those coverage areas as well. This is why we try to be like a specialty broker and help people not get caught buying the wrong product. But some of the most common types of losses, for instance, like sending money to someone that got in your network, pretended to be CEO that said send a money somewhere over here and you didn't check. Sometimes that type of a loss could have a sub limit. So maybe you have $1 million of coverage, but you only have like $50,000 of like covering that type of a loss or 100,000
Mhm.
or something. So
Mhm.
these are the places you want to be careful and like really going through an expert and analyzing your policy to make sure you're caught. But broad strokes, the market, I would say, is definitely softened compared to a couple of years ago. And I think
Mhm.
there is a focus on more of the social engineering, BEC type attacks. We're still aware that ransomware can cause some of the biggest losses, but the security and understanding to prevent some of those big ones has gotten better. And yeah, that's a little bit where the space is.
Okay. How has the rise of AI and automation changed how your business operates and how insurers evaluate and mitigate risk?
Yeah, it's a great question. As a company and our parent company as well, we have a pretty deep bench of machine learning expertise because the whole business, especially at our parent company level, they're actually sitting at the reinsurance level, which means their customers are the insurance companies themselves, and their big task is figuring out uh, how to price accurately as best as possible cyber risks which we've never seen globally. So imagine that you're simulating cyber Pearl Harbors that we haven't seen yet. What are the
Mhm.
real likelihoods of those things? How frequent do we think where those would happen and how big would they get if they did happen? These are really interesting hard problems that Envelop has now been modeling for a decade essentially. And so they've got a deep bench and historically have been using AI machine learning techniques to take every kind of data that one could get in the cyber world and try to use it to better inform those model predictions. We don't, at the data stream level, aren't modeling as much at the systemic global cyber risk level. We are more modeling at the individual company level, what types of factors we think are going to influence that company's risk or the premium they're offered. We sit on tens of thousands of quotes and we sit on lots of security information collected against those companies connected to those quotes. So we build a lot of models to predict expected pricing based off of minimum amounts of data about a company, the lower bound cost at different premium, different limits. So a company can understand kind of what to shop around for before filling out the entire application. We tried to look at what types of external signals that someone could measure that could be a red flag indicator and help companies fix those things before applying to cyber insurance because we know insurers themselves are also often doing external scans on companies that could influence pricing as well. So if they see
Mhm.
dangerous open ports or vulnerabilities on the attack surface of a company, that could influence whether you're offered a quote or the price of it. Um, and yeah, where AI is going right now, and I'm sure will continue to go, is trying to again automate some processes that have typically been done by humans. So an easy one again is like reviewing cyber insurance policies or some of the legalese just involved in applying for cyber insurance, using chat GPT like chat and automation to maybe look through your policy and figure out like what is good and what's bad about it, or like based on the type of business you are, have some automatic suggestions that then experts could take and quickly evaluate. I think these types of areas will be like definitely we've already seen and we'll continue to see development from more of the large language model style AI. But yeah, I would say in broad, big picture, like pretty much anybody that's been in the cyber insurance space has been using machine learning at least in a statistical way for a while to try to model expected losses for companies based on the types of features they can get about those companies.
Okay. So, what's working well for you in your business right now, and what's been a challenge or frustrating?
What I think has worked really well is trying to work with our MSP partners who we love, who have lots of SMB customers that they want to make sure are as safe as possible. And part of the safety isn't just making them have the right security in place, it's also having that economic risk transfer part in place, which is where getting them insurance can be really valuable. Working with MSPs and has been great for us. But in addition to that, where I think I'm really excited is integrating with some of the cybersecurity vendor platforms that these MSPs use. Because again, the data for answering a lot of the questions lives within these platforms. So it's automated, it's more accurate. And so we're putting like, click on a button, we'll give you an estimated quote range, and you can jump right into our platform into an application that's pre-filled with suggested answers based on what we pulled from your data living in that platform. So we've seen great data and results so far with some of our initial integrations, and that's definitely where I want to continue pushing and focusing. I think our company is building out this scalable integration solutions. So like a cyber insurance brokerage as a service. I would love to keep building that into vendors, particularly vendors used by lots of MSPs, because that's definitely been one of our huge target audiences. I think where
Mhm.
it's are tough is just that it still is a green space. And this is, for people in like the product management 101 or whatever, for a lot of people, they're still at the education phase. So like maybe only 30% of SMBs below a certain size have insurance. So a lot of the market, it's challenging to convince somebody to buy something that they've never bought before. And they're still in that education phase. So even though it's a big blue ocean or green grass field, whatever idiom people have about there being a big market opportunity, the reality is that a lot of small companies still believe that obscurity is security. So I'm too small to be a risk. That is definitely not true. And AI is going to continually making it easier to attack smaller companies because essentially it's like the cost is lower for hackers to go after smaller targets. So that's going to continue to be kind of wreaking havoc. So, dealing with that kind of small biased problem, thinking they don't need it is a challenge. And then also there's a lot of people that use a local insurance broker who tend to be great folks. They, help them with lots of other types of policies that we don't touch. So the general liability, all this other stuff, works, all that kind of thing. But the challenge is like convincing people that look, they're like your general physician. They are great for dealing with a lot of your other types of insurances, but cyber is a very specific technical product, and we're like your cardiologist. If you had a heart problem, you'd want to see us for this
Mhm.
type of thing, not just go to your general practitioner. So I think that the challenge for us is still convincing people that have never really looked at insurance for cyber and make them seriously consider it. And the other one is trying to convince people that use a local broker that, well, keep doing that, but we could be a really valuable partner in this conversation because this is all we do. We basically just do cyber, and it is a complicated product. So we can often get better prices than the local brokers can because of our connections to the carrier network. And we just understand really what certain businesses need better because that's like all we do. That's our specialty.
Okay.
So those are kind of the things working well and the things that have been a challenge that we're still,
So, okay, two questions. Can you give me an example of a carrier?
hmm yeah. So Tokyo Marine is a carrier.
Okay. And then
Yeah.
next question, what are you doing to address some of these challenges as far as educating the market goes?
Yeah, so some of how we do that is doing things like this. We try to do a lot of like educational 101s, whether it be podcasts or webinars or one pagers or social media kind of posts with links to additional information. So we've got lots of content that we try to put out. All of this content then we add to our partner portal, which is our essentially our insurance application system. It also functions as a portal with resources. So whether you're an end customer of the products we sell or you're like a partner managing those potential end customers, you could log in for free to our portal, manage all of those applications, but also get access to all the resources, which can tell you like for individual businesses or industries, like what makes sense, what you should know about cyber. Lots of things from, how to avoid getting a claim denied to what type of size policy should I get to what is the healthcare industry vertical need to worry about more than manufacturing, these types of things. So, yeah, I would say that's how we're trying to bridge the gap a little bit with the education piece. And then, yeah, like I said too, the other part is I think it is a technology solution. I think lots of people have had successful cyber insure tech companies by really just making it the whole process easier. So we want to continue doing integrations with security platforms, improve our brokerage platform to put more of those learnings right there for customers to make it simple. I think those are the main things we're trying to do right now.
Which business metrics or insights are you most focused on improving within your business?
What we really care about is like a bottom line, every single insurance broker, they care about gross written premium or GWP. It's basically what's the total premium of all the policies that went through your company where you were the broker. We get a percentage of all that premium, which is why we care about that. That's like our number one KPI. A leading indicator to that, especially since we have so many MSP or MSSP partners, is how many referrals from those partners that we're getting. So we keep track of that. That's a very strong leading indicator. We have very good statistics now after 5 years on the probability that one of those referrals will ultimately become a customer, premium size per customer, things like that. So trying to, again, engage the most with our partner network as well is quite important. And again, where we think we've seen a lot of success is that from some of these early integrations we've had, that's now been generating over the last couple months a very large chunk of where our referrals are coming from, which I think says something about the accessibility and the ease of those solutions, where instead of introducing a customer via an email where then they have to start the whole process from like a warm introduction, they can set it up on a tee, this conversation with already links that they just jump right into, and then everything's a little bit more self-explanatory. And yeah, so I think those are some of the key metrics that we look after.
So, how do macro events from ransomware, for instance, spikes to regulatory changes affect your strategy?
Yeah, I think that for us, the macro level events ultimately they trickle down into, I think, what we would be trying to tweak or put out there in terms of the educational material, because
Mhm.
we know that what happens after big events are that typically, again, there are shocks to the insurance system as a whole. And that shock typically produces changes in price and also changes in security requirements. So we try to make sure that we're staying on top of that and understanding if, yeah, you saw a surge in ransomware or a surge in some other type of peril or loss, that we'd understand what types of security controls are going to map to those things. And so then it might be trying to get ahead and making campaigns around, hey, this hasn't hit yet, or this is going to be hitting right now, but here's the type of thing you need to be aware of for your business going into next year. Or even if you don't have insurance, just general, like, we hopefully are good stewards and just try to publish things as well, just on general security practices.
Mhm.
This is where insurance, I think, is also quite powerful, like, and has been seen more as a tool for driving overall spend in security, is that, like, insurance gets the unique way of quantifying risk, which isn't like a 0 through 100 or an F to A plus kind of security score. It's very much dollars and cents. Like, what do we think your average loss is going to be, company X, based on your type of company and your type of security? And so the learnings that come from that, I think you have to appreciate that these cyber insurance companies, ultimately, they're held accountable for how they choose to view risk. And if they're wrong, they're going to be losing money. So I think seeing how they respond to actual losses, we should take with 2 cents, I think, at least. And I think that's why it's worth trying to propagate what the insurance world learns about security, even to people that aren't buying insurance, because like we can at least tell them, hey, this is the kind of stuff you really should be proactive about, because we believe this is the type of security controls you'd want to have in place so you don't have this horrible thing happen to you.
Mm,
Because whether you're insured or not, that helps stabilize the world and the markets if people aren't suffering those losses.
okay. Where do you want DataStream Insurance to be 6 to 12 months from now?
Yeah, I think that well, where I'd want it to be is multi-billion dollar company, and I guess we all have yachts, but more pragmatically, where I hope we are. I'm joking. I'm half
I
joking.
know.
Uh,
Why? No reason to joke about that.
um, but yeah, where I would really like us to be is I would like us to be the number one insurtech platform as the go-to solution from all the big cybersecurity vendor tools used by our MSP partner network. I just want us to be the go-to solution. Like, hey, it doesn't matter whether you're using tool X, Y, or Z to manage your customer cyber risk. There's a data stream button within that click it to get like this insurance stuff figured out. Cause like they just made it so easy and it's so cheap and the products are always so good. That's exactly where I want us to be, is like the go-to solution for the MSPs. And it's the go-to because we've really figured out how to solve a problem and solve it easily for those partners and their clients.
Max, thank you for joining us on CEO Tech Talks. Your insights into how data and AI are reshaping cyber risk give us a new way to think about digital trust and business resilience.
It's a pleasure. Super fun talking. And again, hopefully anyone listening to this checks out insurance if they haven't looked at it, and DataStream in particular. But yeah, we hope that people take security seriously, and appreciate the chance to talk about this kind of.
Absolutely. And to learn more about DataStream Cyber Insurance, visit datastreaminsurance.com or connect with Max Henderson on LinkedIn.
Pleasure.
Thank you for joining CEO Tech Talks. I hope today's conversation sparked new insights and inspiration for your own leadership journey. Until next time, stay inspired, stay visionary, and keep leading with light. Brought to you by Neura AI Consulting.